With the banking collapses and the March Fed meeting in the rear view, bond market volatility cools, leaving behind big unresolved bases in US Treasuries. Let's check the charts. Here we have the 30-year T-bond futures carving out a multi-month base below a key polarity zone, marked by the June pivot lows from last year and a shelf of former highs, all while in a bullish momentum regime. Now, if and when the 30-year takes out that 132.18 level, I like it long, targeting 143. Now, looking across the curve, I like the 30-year the most for two reasons: the bullish momentum regime and the breakout level. This polarity zone is just so much cleaner in the 30-year than other durations. Now, the reason for that is as we move down the curve, as we move to shorter durations, volatility increases as the bond market anticipates the Fed's next move. On the next chart, the 2-year T-note really captures that. Now, notice the big wide-body bars coming off of those March pivot lows earlier this month. Right? This was the reaction to the banking crisis. Now, levels very similar. We're looking at those June pivot lows from last year. Now, if and when the 2-year takes out that level around 103.25, I like it long towards 105.14. Now, when bonds do break out, I imagine it's going to be the entire curve, not just the short end or the long end. We're talking the 5 and the 10 as well. Now, other risk assets, particularly, or other long duration assets, such as growth stocks or tech stocks, will likely enjoy a significant tailwind, a significant rally along with bonds. But for stocks in general, it's not so much about whether or not bonds break out. It's more about how they break out. Now, during the initial reaction off of those March lows, this high volatility in the bond market, in this 2-year T-note, the S&P 500 dropped 5% heading into March 13th. Since then, as the 2-year T-note just kind of chopped sideways, that volatility kind of simmered down, the S&P 500 is now up 5%. And that's really what's going on here. For stocks and just risk assets in general, it's not so much, again, whether bonds resolve higher. It's more about how they resolve higher. That's something we want to keep in mind in the coming weeks and months. Thanks for watching. If you have any questions, reach out to info@allstarcharts, and I'll see you next time.